shock US jobs data, but Bitcoin's price is remaining green. We've got all coins rotating green as well. Is this market shrugging off the economic data? We've got a lot to get into, hot off the press. We've just got the non-farm payrolls, which came in super duper hot, guys. If I show you the chart here, it came in at 256,000 new payrolls versus the expected of around 160,000. This is a big beat on the non-farm payrolls. But remember what I said, we need the opposite to happen. Good economic news is bad for risk on assets, is bad for crypto right now. It's good for the economy. A lot of new jobs created. Unemployment fell from 4.2% expected to 4.1%. This economy is doing a lot better than economists have projected. And what that therefore means is that there is less of a probability that Jerome Powell cuts rates. And we're starting to see the impact of that in the markets. But also, the side story we're seeing here is that Bitcoin initially collapsed. You can see a big candlestick to the downside, down 1.56% in an hour. But then the following hour, at the time of recording this video, we're up another percent, buying into that dip, which is interesting. So we've got a lot to break down here. The news has literally just come out. And if you appreciate these types of updates, as and when economic data is coming out, smash up the likes. Do not forget to subscribe. If you actively want to trade, Bybit, BitGet, Mexia, the 3 platforms I use. Links in the description to get yourself set up. Get some amazing sign-on bonuses as well. All right, guys, look at this. Look. So when I left you guys yesterday, you saw the fear of the markets, right? And towards my evening yesterday, around 8 o'clock in the evening, we started seeing some really positive momentum. And I shared in our VIP community that the 4-hourly candle close, which I'm just going to show you now, was really positive. I said it on this candlestick here because you saw a wicking candle to the bottom side, which shows that the bears were exhausted and the bulls were looking to take control. But what I said to our VIP community was, watch out. It may just be the bears just taking a coffee break, right? Just cooling off, just taking a breather, because obviously they've done a great job of pushing us to the downside from 103,000. So maybe they want to cool off. And we managed to have 4 good 4-hourly candles. That's about 16 hours here to the upside. Of course, leading up to the important non-farm payroll, which we've just got now. And when that came out, boom, big fall to the downside, right? The data was too good, which is what we spoke about. We did not want that. You can see here, markets now are pricing in absolutely no chance. Let me just jump over here. No chance, right, for a rate cut in the January meeting on January 29th when the Fed officials meet. The next meeting on March the 19th, you can see 72% of the market still think by the end of March, which is the whole of the first quarter gone, we will still be here at 4.25 to 4.5% on the Fed funds rate, and we would not have had another cut up until that point. That's what the market's pricing in. If you jump onto the May meeting, which is the 7th of May, that's when you start to get some split opinions, but still 60%, the vast majority here, still think we wouldn't have had a rate cut by May. And if you go into the June meeting, 18th of June, that is where finally the first time you see the majority of market participants thinking we will get 1 rate cut. Now, what's interesting is with the worry of this positive data coming out, we've not yet seen the fear or the talk around what if we're going to actually go ahead and get a rate hike. What if the data comes in so hot and so, inflationary that maybe we need another rate hike? Can you imagine that? That would absolutely tank markets. But for now, the saving grace is that many economists, many people, investors in the market think that the positive labor figures we see today will cool off over the next 3 to 4 months. That is their bet. They think that this will eventually cool off. They think it's a surge in hiring, a surge in, the jobs figure we got earlier in the week as well. They think this is all the positivity around Trump and companies wanting to hire more and feeling really excited and optimistic around 2025 with Trump coming in, that led to some of the economic data being really positive. We'll have to wait and see. Either way, we need some of this economic data to start weakening so we can make more of an argument, more of a case for rate cuts this year. That's going to be the fuel that allows crypto to move. You can see the fear and greed index falling here to 50, which is neutral territory. And again, not to be surprised when we saw what we saw on the daily chart, which is a couple of horrible candlesticks, right? 3 bad days in a row, 5%, followed by 2%, followed by another 2.6%. This is not a nice fall, right? Falling from 103 down to lows yesterday of in that region of 91,000. That's going to be painful. It's going to take its toll on markets. What's good is we are seeing some strength, and you shouldn't be surprised, right? This is an important, let me just get my line straight. This is an important support level here. that we need to be able to bounce from. If we can bounce, great, we're ready to retest some of these levels. But again, like I shared in my VIP community, I shared a bit more of a professional chart than this one that I took time to make. You know, this could just be another lower high. See, this is a high, another lower high, or even touch there again, the same high, and create a double top pattern, which can then eventually tumble. So the bear, if you're a bear right now, the chart is good for you, right? You're in a good structure. If you're a bull, you've got a lot of work to do, and that work's going to start by us creating a higher high. We've got to hold this as a strong point, and we've got to stall for a little bit, try to work our way a little bit here, and eventually just poke above this bit. Just poke above this high where we created it around that 102.5, 103 mark, and then we kind of break in the structure. Then you have a W pattern to the upside, which is actually a bullish pattern. But that's a long way away, right? That relies on us getting back to 103. And 103 will mean that some of this economic data's got to cool off. We've got to feel some positivity in the market again to rotate that risk on. At the moment, we're not seeing that, right? You're seeing the dollar index having positive days here to the upside. I mean, that's its fourth positive day in a row in the dollar index. You're seeing the US 10-year yield spiking up. The risk is rotating off. Because of what's going on here, we're seeing less and less chances of rate cuts being priced into the market, and that's causing the pain which we're seeing. Now, longer term, am I panicking? Am I selling? Am I, running away from this market? I think we covered this off in yesterday's video, but for those who haven't watched it, haven't taken the time to watch yesterday's video, which highly recommend you watch it. If you want to know what the theme of crypto is for the next few months, just go spend 8-9 minutes watching one video. If you watch it in ×2 speed, it's 4.5 minutes, right? Good luck with my speaking speed. But look, the reality is we are in a situation here where the markets are calling off. Right? This was a very, very strong, powerful move. Let's just remind ourselves, we're sitting here at 53. Trump comes into power later on, break through previous all-time highs. Off we go, off to the races. We spike all the way through up towards 89,000. But we don't stop there. We consolidate. But in an upwards trend, keep consolidating, all the way up, 108. And now we're getting a calling off leg. That's okay. It's okay to have, positive legs and calling off legs. Where's our regroup? Where's our regroup before our next leg up? That's what we need to focus on now. If you're a bull and you're looking at the positive situation, that's what we're looking for. And ultimately for me, wherever this lies, because maybe that regroup will lie further down, wherever that regroup lies is where I want to be buying the dip, right? So I'm going to start nibbling as we start pulling back into some of these 80, 85, 86 areas. But should we go and revisit that previous all-time high, which we finally broke, that 73, 74,000 level down here, then I want to be buying the dip even more. I certainly would not be in any leverage trades right now. I would not be gung-ho on crazy 10x, 15, 20x trades right now. Absolutely not. This market is too volatile, and you're seeing the liquidation data. I mean, we spoke about yesterday, I think it was 500 million wrecked in yesterday's video when we checked it. In the last 24 hours since then, another $340 million wrecked. And it's not from one side. It's just not just the longs. I mean, look at this, 195 million longs wrecked, and then 144 million shorts wrecked, because that's what the market is doing right now. It's whipsawing. It's taking you out to the bottom side. It's taking you out to the top side. It's just saying, look, if you're leveraging in this market, you're stupid. That's what it's basically saying to you. So if you're not taking the clues, I don't know what else to tell you guys. All right. So if you haven't hit the subscribe button, I'm trying to get to 20,000 subscribers, guys. Please do help this community. I've been making videos for years here, bringing you guys updates on economic data, how it affects your crypto investments. If you like that type of stuff, smash up the subscribe button, share this content with people you know who are in the crypto market as well. Let's take a quick look at altcoins here. Pepe moving 2.5% still despite the negative jobs figure. Which I've done a breakdown video of, is moving 2.6%, a very promising player in the real world asset space. Of course, they announced their $1 billion deal with Damac Properties, one of the biggest real estate players here in Dubai and the Middle East region. And yeah, we're seeing altcoins move, right? Phantom against Bitcoin is moving 3.86%. Cardano 2.8% up today. Avalanche 2%. Algorand 6%. Interesting to see Algorand waking up a little bit here with a bullish engulfing candle. If you don't know what that is, ijazcrypto.com/TA. You got to get up on your TA knowledge, guys. If you're not spotting these bullish engulfing candles, you're missing a trick. Aptos 4% up here on the day. Strong day for Aptos. Interesting landscape for altcoins. And it makes you wonder if this jobs figure was a little bit more forgiving, if it even came in expectations or lower than expectations. Today could have been a strong Bitcoin and altcoin day. I mean, we're talking a 4-5% recovery day could have been today. So it's interesting to see that the bleeding has been stemmed. I don't want to talk too much because I want to wait to see where does this 4-hourly candle finish. But so far, the time of recording this video with 1.5 hours left before this 4-hourly candle closes, this looks pretty good. It shows that the bears tried its best to push us down, post the jobs figure. Bulls managed to recover it, push the price back up here where my cursor is, 94.3. And now if they can stop it here, and we can open up the next candle slightly green and start working our way back to the upside, it looks like we want to hold this support level, right? We really want to hold this horizontal where my cursor is right now, that 91.7 level. We don't want to lose it. That being said, bears won't want to give up, right? Bears are going to want to post another lower high. They're going to want to do this. They want to let us have our moment, and they're going to want to come back down, and they want to breach this horizontal level and send us tumbling to the downside. So all to play for here on Bitcoin. Not good jobs data. We'll stay posted for more data as and when it comes out. Make sure my Telegram community is free. ijazcrypto.com/TG. Thanks for watching, and I'll see you in the next one.